Hi again, everyone. Hope you're all doing really well. I said I'd be back to talk a little bit more about the earnings, so here it goes. Obviously, it's been a bit of a challenging stretch for Mullen Automotive as the stock continues to trade below the $1 mark for now 9 consecutive days. And if this week continues as it is, we'll definitely hit the 10 and 11 this week later on. To make matters worse, the past 3 days have seen the stock drop by over 10% each day, underscoring the market's skepticism towards the company's recent developments and financial performance. Despite the company's efforts to present a positive narrative, the market remains unconvinced and the situation is becoming increasingly dire for both the company and its shareholders. Mullen recently released its earnings report for the quarter ending June 30th, 2024, and the results are far from reassuring. While the company highlighted a positive stockholders' equity of $53 million and total assets of $192 million as of June 30th, the focus on these figures seems like a distraction from the more troubling aspects of the report. For instance, the company's cash position has dwindled to just $4 million, down from $155.7 million as of 30th of September 2023. The drastic reduction in cash reserves raises serious concerns about Mullen's liquidity and ability to sustain operations without further dilutive financing, which we have since seen. One of the most telling signs of the company's struggles is their decision to emphasize achievements that occurred after the reporting period. Mullen highlighted a recent $7 million sale and the promotion of key executives, but these developments do little to alleviate the underlying issues reflected in the financial statements. The company's net loss for the 9 months ended 30th of June 2024 was a staggering $289.9 million, and while this is an improvement from the previous year, it still paints a bleak picture of Mullen's financial health. Adding to the complexity is the fact that much of the revenue from the 377 vehicles invoiced valued at $16.8 million has not yet been recognised due to payment delays and return provisions. This deferred revenue, coupled with the company's heavy reliance on financing through convertible notes and warrants, raises questions about the sustainability of Mullen's business model. Speaking of dilution, the potential issuance of up to 85 million new shares through warrants is another dark cloud hanging over the company. This level of dilution could significantly erode the value of existing shares, making it even more difficult for the stock price to recover above the $1 threshold. The market is clearly anticipating the dilution, which is likely contributing to the continued downward pressure on the stock that we keep seeing. Despite having executed multiple reverse stock splits in the past 18 months, Mullen may be forced to consider yet another reverse split if the stock remains below $1. The company is technically still allowed to perform additional reverse splits as there are no hard regulatory limits on the number of times this can be done. However, each reverse split further erodes investor confidence, and without substantive improvements in the company's fundamentals, the stock is likely to continue its decline. Mullen's management is trying to project optimism, with CEO David Mitchell emphasizing the company's potential for strong year-over-year growth in the upcoming fiscal quarter. However, the market's reaction suggests that investors are not convinced. The focus on reporting post-period achievements combined with severe dilution threat has left the market wary, and the stock's continued decline reflects this uncertainty. As Mullen continues to struggle, the future remains highly uncertain. The company faces significant challenges in regaining investor confidence, stabilizing its finances, and ultimately staying listed on the NASDAQ. Without a clear and effective strategy to address these issues, Mullen's stock may continue to languish below the $1 mark, with the spectre of delisting becoming more and more likely. Anyway, just a few thoughts on the earnings. I'd love to hear what you guys think. I know everyone's pretty adamant about the same thing, that the company's a scam, and it's obviously increasingly looking like that. But I always love to hear from you guys. I hope you're all doing really well, and until next time, may the markets trade in your favour. Cheers.